Reddit is on the move. WallStreetBets is promoting the ticker SPCE as SpaceX Early. Apparently, many investors don't know that SPCE is Virgin Galactic, and they have pumped this new meme stock's price from $2.5 to almost $9 per share. This all happened last week. Most of the Reddit threads have been removed by moderators, but here is one that I posted on my X account. Why am I able to buy SpaceX early? I heard someone said SPCE means SpaceX Early, but not everyone can get it. But I found it in my Robinhood account last week and I'm already up 300%. Is it because of Robinhood Gold? Also, is it better to buy more or sell on Monday? And here is another one that hasn't been deleted yet. Super glad I got into SpaceX early and cheap too. The user posted a screenshot with an average cost of $2.95 per share and profit of more than $100,000. Considering the price action, the bait obviously works. Some time ago, I read a study from NYU Stern stating that investors take 6 minutes on average to analyze a stock before investing. It takes me approximately the same amount of time to decide what to eat for dinner. Now, let's open StockPicker and check the fundamentals for Virgin Galactic. I won't spend much time on it as it takes me less than 6 minutes to decide not to buy the stock, but I think it will be useful for investors to see what they are actually investing in. Virgin Galactic generated a revenue of $227,000 in Q1 of 2026. This doesn't match their current market cap of $467 million. At the same time, their operating loss for Q1 was $65 million. Furthermore, Virgin Galactic is diluting shareholders at the speed of a rocket launch. Their shares outstanding increased from 10 million in 2020 to 80 million in 2026. That's an 8x increase. Hey, can you do me a favor? Please subscribe to my channel and click on the bell button. This would be the best way to support me. After doing my investment research for well less than 6 minutes, let's move on to an interview with Brad Gerstner from Altimeter Capital, who seems to be looking for back holders for his SpaceX, Anthropic, and OpenAI shares.
Can the market support that much supply of new tech stock hitting the market at the same time? What would you tell that viewer who's saying, yes, I want to invest, yes, I understand I shouldn't time the market, but I feel like there are 3 asteroids headed for Earth, and maybe I should wait till after. How would you think about that if you were that viewer?
Yeah, Josh, great question, and I loved your earlier commentary on Snowflake. Let's just say this. Today is not the day that you shove all in on the market. You know, go back to the heuristic I used, 369. And let's say you have 0 in the market today and you want to put $100,000 to work, then I would put 3. Right? I would put 30% of that to work because you have to start at some point and then you wait for your moments. Yes, we have incredible IPOs coming, starting with SpaceX, rumored on June 12th. Hopefully, I'll be back in the New York Stock Exchange with you guys. It's going to be an incredible IPO. It's going to raise about $75 billion. Okay, so if Altimeter, and we do want to buy the SpaceX IPO, I've got to raise that money from somewhere. So I've got to sell some other stocks in order to buy SpaceX. That's just the way it works. We don't have unlimited capital. And when Anthropic comes public in the fall, or OpenAI comes public in the fall, I'm going to have to sell something else to buy this. So your point is certainly correct. But the only thing I would say, Josh, is remember the depth of our capital markets. I mean, we're talking 100 trillion relative to $75 billion. So in the grand scheme of things, I think particularly because we're going to have early adoption, early inclusion in the index for SpaceX, I think there's going to be enough capital to do that. But the bigger risk right now is simply that we've come a long way quickly. Right? We could have a 10 to 20% consolidation in the SOX or these other technology and AI markets, and that would be a run-of-the-mill consolidation. So you want to make sure that if you're watching at home, you have some cash on the sideline. So when the market comes in, the secular trend doesn't change. AI is where you want your money, but you have some more dry powder to buy those things.
Altimeter Capital owns shares in all three companies. SpaceX, Anthropic, and OpenAI are still unprofitable, and the potential market caps they're seeking represent ridiculous valuations. I want to remind you that 2 years ago, Brad Gerstner was telling us that Google search dominance is over because his 15-year-old son is using ChatGPT.
Okay, so Josh, here's my fundamental position. Search is going to be replaced by agent-led information discovery. I see it every day. My 15-year-old son says, Dad, I don't use Google anymore. I just use ChatGPT. I talked to 2,000 people at the Javits Center. How many people have used ChatGPT instead of Google over the course of the last 2 days? 1,000 hands in the room go up. I asked my analysts who are sitting on their desk. They're replacing their use of Google with ChatGPT. We are having a fundamental structural shift in how people retrieve and discover answers to the questions they have.
The moral of the story is we must not blindly follow investing gurus and Reddit trends. We must research stock fundamentals before investing our money, preferably more than 6 minutes. That's it for today. If you like this video, I'm sure you will also like this one. Don't forget to hit the like button and subscribe to the channel.